Hi, everyone. Thanks for joining me today. We're going to talk about and dive into cash flow forecasting and management, a topic that can literally make or break your business. So let's kick things off with a verse that reminds us how powerful foresight and planning actually are. In Proverbs, it says, "Our sensible person sees danger and takes cover. Inexperienced keep going and are punished." That's from Proverbs 27:12. So managing your business's cash flow is about being that sensible person, looking ahead, spotting risks, taking strategic action to protect what you've built. Now, that might mean scaling back by not spending in the slow season or holding off on inventory purchases, or even preparing a cash cushion before a big launch. Let's break down exactly how to predict, plan, and thrive with your cash. My name's Jacob Curtis. I'm a CPA, a certified Profit First professional, and a business coach. And I started Curtis Accounting Solutions to remove the stress of doing bookkeeping, payroll, and taxes, and to provide some practical business advice that helps Shopify sellers piece together financial freedom. And I'd love to hear your thoughts and questions on today's episode. So please leave a comment below and remember to like, share, follow, subscribe, all those good things. Okay, let's dive in. So cash flow forecasting is the practice of predicting that money will flow in and out of your business over a future period, whether it's next 3 months, 2 months, 6 months, year, whatever it is. And you can do this weekly, monthly, or quarterly, or even annually. For example, let's say that you make $10,000 in sales each month and your expenses total $8,000. Your forecast would show a $2,000 cash surplus. But what if your ad spend jumps to $4,000 next month? Suddenly you're running at a deficit, right? So forecasting us helps to see those shifts coming before they actually hit. Now, a good forecast prevents surprises. If your sales drop in February, but you know it in advance, you can delay a product launch or reduce some ad spend or things like that to help with that slowdown in February. For example, a Shopify seller who noticed their February's sales was historically lower by 30% revenue held off on restocking until March, thus saving them some additional stocking and inventory costs of about $5,000 or so. Forecasting lets you act and not be reactive. Now, your forecast starts with your current cash balance. That's the first step, to start with your current cash balance. Then add in your expected inflows, like your daily sales, any refunds, maybe even some affiliate income. And finally, you want to subtract out your outflows, your cost of goods sold, payroll, ad spend, software, things like that. So for example, if you're starting with $5,000 in cash, you expect $12,000 in sales and $9,000 in expenses. This gives you a projected ending cash balance of $8,000. This snapshot is your map for the future. You don't need fancy tools to really start forecasting. A well-structured Google spreadsheet is enough. Pull reports from Shopify to get your sales data and refunds, then plug them into your spreadsheet. You know what bills you have, so you can quickly estimate and figure out what, on average, this is what happens with my expenses, so this is where my cash flow should be each month. So if you're using QuickBooks or another software, there are some built-in tools and integrations that can help make forecasting easier and even automatic. But if you don't have those tools, just start simple and then you can build upon it as you need. Now, cash management is where strategy meets discipline. One powerful trick is to separate your bank account, one for operating expenses, taxes, profit. Well, use the profit first method. For example, if you're bringing in $15,000 a month, allocate 30% to operating, 15% to taxes, 10% to owner's pay, and the rest to inventory and owner's pay. This helps you manage your priorities without letting your spend get out of control. Tracking metrics is a key here. It gives you the insight beyond just the balances. So your burn rate is how fast you're spending your cash. Runway is how long your current cash will last. And operating cash flow tells you whether your business generates enough cash to sustain itself. For example, if you're burning $5,000 a month and you have $20,000 in cash, you have 4 months of runway. Now, that changes how aggressively you can scale or spend depending on your business. So once you have a forecast, you've got to use it. Just don't do it and set it aside. If you're going to do a forecast, you need to use it. Don't let it just sit there. If your forecast shows low cash in April, shift your big promotion to May, or maybe shift that big promotion to March, or maybe even put it in April. For example, a client delayed a big bulk inventory order until after their spring launch because they didn't have the cash to do it. But after that launch, they knew that they would. So forecasting showed that there would be a cash dip below $1,000. And so they delayed it and made sure that they didn't have their cash go that low. This change kept them profitable and a little more stress-free than stressing about the money. So let the numbers lead as you do this. Now, forecasting only works if it becomes a regular habit. Review it weekly, monthly, whatever it is, you got to review it. Update it with your plans and assumptions as they change. Keep the actual numbers in there. For example, a client added a new product mid-month, but because she updated her forecast, she saw how that would actually affect her inventory costs, adjusted her ad spend, and avoided running out of cash because of her projections, because of her forecasting. Forecasting isn't just a one-time thing. It's your steering wheel. You've got to give it continual input so you can drive that car and drive your business where you want it to go. Now, just like Proverbs 27:12 reminds us, being sensible and forward-thinking helps us avoid trouble. Forecasting and managing your cash is about being proactive, not panicked and stressed. It's about being faithful with what you've been given. So don't wait for those surprises. Don't fly blind. Let your forecast be your shield and your strategy for a thriving business. Now, if you have any questions or need assistance with managing your company's finances, don't hesitate to reach out. I'm here to help you piece together financial freedom. You can schedule a call with me by scanning the QR code or clicking on the pinned link below, or you can see it there on the screen. But remember to reach out if you need help. Remember to follow me again, Jacob Curtis CPA and Curtis Accounting Solutions on Facebook, Instagram, Pinterest, and YouTube. Thanks so much for watching, and we'll talk to you all soon.